Good morning, everybody, and welcome to Swing Trading Today. This is Bob Desmond over at the Contrarian Trader. Before we get into the charts, I'm going to ask if you could just subscribe to my channel, click that bell, and you get notified of any new videos if you're watching this on YouTube. And if you watch this on any of the social media platforms, you know the deal. Follow me, leave a comment, I'll get back to you. Now, if you didn't watch best stock charts for the coming week, I sent it out to non-members on Saturday. And members, I posted the week ahead commentary, which is where I review the week ahead with members in terms of economic data, the performance of the market last week, what I expect this week, as well as a deep dive into our positions, as well as the stocks I discussed on best stock charts. So let's get to it. This morning, we're seeing the U.S. dollar come under pressure. Now, I discussed this with members yesterday. You have the stochastic, the momentum oscillator, which is trading down below the 50 level on the U.S. dollar and is bearish. Now, the weekly chart from last week was somewhat bullish. We had a bullish key reversal, so I'm torn here a bit. We have a lot of economic data coming out this week, and this economic data can certainly influence the U.S. dollar. Plus, you have the FOMC meeting this week. So the dollar has broken down to this is a 1 hour chart. Let's use our traditional 4 hour chart. Now the dollar, this is a 4 hour chart. The dollar has weakened up here this morning, but we are testing the lower band of this bull flag formation. So I'm not ready to call the dollar out yet. Now, what I will point out is that we have a head and shoulders setup which is formed. Here is your left shoulder, your head, your right shoulder, and here is, let's be really conservative here. Here is the neckline. I'm going to put an alert just below the extremes of this bar here. Now, what if we break down below this lower band of support, which we are at currently testing, or if we break down below this neckline here? We'll want to take a look at commodities. Gold. It's rebounding off the lows of the session, but it's still weaker on the day. It should be trading higher, but it's not. But it is oversold on a daily basis. I particularly like the miners. We did buy back our NUGT position, the half that we had stopped out of late last week. So we're looking for a rally sometime this week on these names. Does it become an investment? I'm not quite sure. We'll be looking for a weekly breakout. Before, I was confident in saying that the NUGT, GDX, whether you trade in the gold miners, gold, etc., has become an investment. Right now, it's just a short-term oversold swing trade. Now, taking a look at silver, silver is up slightly, yet we have broken out on this 4 hour chart. So that's a bullish setup. I think silver is going to have a good day. And we are currently long a small position of silver. Now, taking a look at crude oil, and then I'll segue over into the stock market futures. The price of Brent crude is up slightly. We have a nice base which is being formed here. It looks as though we bottomed out on this correction on the 18th of July. Ever since then, on this 4 hour chart, we've been putting in higher lows and higher highs. So crude oil is looking good. We are long of the energy sector, looking to add more. Let's talk about the stock market futures. We'll begin with the S&P 500. Okay, so we have a bit of weakness here this morning. Now, I was speaking about this pattern on Friday. I'm not sure whether it was on a swing trading today or I was discussing with members, but I was concerned about this price action and the fact that we had a lower high being put in, and this is a limp rally back, and I was concerned about the health of this rally. So we drew our trend lines, an upper band, a lower band. We broke that support level. Now remember, this is only a 4 hour chart. We closed pretty much at the lower band of the rising uptrend channel on a weekly basis on the S&P 500 last week. So we don't have a reason just yet to go jumping into the short side. So I would caution about getting too excited too quickly about getting short of this market. But the inverse is true as well. I would be cautious about getting aggressively long right now as well, especially with the economic data and the FOMC meeting coming out this week. You have the jobs data on Friday. That's the Pimp Mac daddy of them all in terms of economic data. Here's the NASDAQ, down 8 points. So without even looking, I can pretty much bet that it's the FANG names that are providing the weakness this morning. We have a lower high here. We have broken down to a lower low. So I think there's more pain to come here on the FANG stocks and on the NASDAQ for that matter. Now, it isn't really fair just to simply blame the FANG stocks for the weakness in the NASDAQ. You had Intel, which reported last week, and they delayed the release of a new chip. And you could see, again, 4-hour chart, the shares have been simply hammered. So this is a big company, huge company, and it's putting a lot of pressure on the NASDAQ. Taking a look at the 10-year Treasury note, we are down this morning, which means yields are rising. We had a breakout on the 10-year yield last week, a very strong week. So there's going to be a lot of pressure on the Federal Reserve right now to pause in their rate hikes. Why? Is because we're waiting for a counterpunch from the Chinese with regard to tariffs, or whether or not they continue to devalue their currency, whether or not they start selling treasuries. Who knows? We had a GDP report released on Friday, which on the face of it, the headline was really, really good. 4.1% growth, but it missed the published expectation of 4.2, 4.3%, and it certainly missed the whisper number. Now, the way that we were able to get that 4.1% read on GDP was because we pulled growth forward, meaning companies stockpiled goods in advance of tariffs being placed on those goods. So the probability of us repeating another four-handle GDP is improbable for the next couple of quarters, because Q2 is historically the strongest quarter for GDP growth. So let's not get wrapped up in one single number. Let's understand what's under the hood of that number and the seasonality of GDP growth. That's it for this morning, folks. If you're not currently a member, sign up for the 14-day free trial offer. Again, smash that like button if you're watching us on YouTube. Leave a comment. Share with a friend. Everybody have a profitable trading day and be well.